we go. Welcome. You're listening to the best of investing on News Talk 910. This is the show where we present valuable information about real estate, the financial markets, and other economic business of the day. For those of you listening for the first time, here's our format. A few guys, in this case just a couple of guys, because a couple of our co-hosts couldn't make it today, sitting around a bar talking business with you, the audience listening in. I'm your host, Edward Brown, and I'm pleased to have as my co-host Mark Honf of Pacific Private Money, California's fastest growing private lender. Our number is 888-912-1190. Now write that number down, 888-912-1190, because you're going to use that number to answer the trivia questions for 3 vacations given away during each commercial break. That's right, we're giving away 9 vacations during this show, and the vacations are sponsored by Lighthouse Resort and Marina, located 1 hour northeast of San Francisco. The vacations are free. They only request a $75 cleaning fee to cover housekeeping expenses. Their website is lighthouse4fun.com. You can reach them at 916-777-5511. And today's trivia theme is, get ready, cartoon animals.
Oh, yeah.
Oh, you love that. You like that one? Okay, you're going to do well on this one. Our website is bestofinvesting.com, and we're also on television, Comcast Channel 26 on Saturdays at noon and Sunday at 6 p.m. And Mark, you know what? We're going to kind of get into what the email theme is, because people have been asking, exactly what are deeds of trust? And then I'll chime in with the kind of story that I came in with.
Sure. So, little backdrop for those of you new to listening to our show. I am president of Pacific Private Money, and what Pacific Private Money is a hard money lender, sometimes known as a private money lender. And for those of you who may not be familiar with what a hard money lender does in this marketplace today, is we essentially lend out other people's money mostly to real estate investors. We're kind of filling that market niche that the banks don't really fill right now, which is making loans to real estate investors.
Yeah, a lot of people realize how hard it is to get a loan from a bank right now.
Yeah, unless you're buying a home. Now, if you're buying a home, of course, the banks are making great loans right now. What, 3 3/4 you can still get a bank loan for? And so the banks are really focused on making consumer home loans. So if you want to buy a home for your primary residence, absolutely, there's Wells Fargo, Chase, Citi, they're all out there, making those loans. And but if you want to buy investment property,
yeah, because some of those deals out there are pretty good.
Yeah.
People are saying, well, I don't want to move from my house, but I'd like to invest in some investment property.
Absolutely. So if you're looking to leverage your savings to buy investment property, or maybe you want to buy fix and flip, or maybe you own commercial or rental property already, and you want to pull some cash out to do whatever you want with it, the banks pretty much, you go to the bank and ask for a loan on your apartment building. It's
Yeah. Wait, do that again.
Oh
boy!
Thank you for sharing. No. So the hard money lending industry, or private money lending industry, and again, it's referred to both ways. It's really the same thing. So private lending, hard money lending. I'm going to use it interchangeably today, but that industry over the last 5 years, since the whole market meltdown and the whole subprime market meltdown, a lot of new companies like mine, like Pacific Private Money, have sprung up to serve the demand for capital by real estate investors and other people that the banks aren't serving.
Yeah, but even though you're a fairly new company with 5 years old, that's not really that relevant, because you've had a lot of experience for a long time. In real estate, so it's
30
not
years
like
experience.
People,
in real
yeah.
estate.
I mean, so
I'm
it's
an
not
old
like,
guy.
well, it's interesting because when we had done hard money loans years ago, our best years were in the first few years that we started. So it was kind of irrelevant that we hadn't been in the business for 25 years, because all you're doing is really matching up the loans with the money.
Right, and so again, for people who aren't familiar with what a hard money lending company does, we have 2 distinctly different types of clients. We have our borrower clients looking for capital, and then we fund those loans through capital from private individuals. In other words, we use the retirement savings of private individuals like our listeners out there. So if you have an IRA account or money in a savings account, if you've got an IRA account that you can self-direct, you can invest those monies. Obviously, you can buy stocks and bonds, and a lot of people are doing that right now. But for those people seeking higher yields, you can fund a loan secured by real estate. And so that's the other side of the coin is we're kind of directing the flow of capital, as you will. We're matchmaking people with money who want to earn a higher yield on that money, a secure high yield, and we're matching them up with people who are looking to borrow money and are willing to pay a higher yield for the short-term use of that money. And so we're brokering that transaction.
Okay, and a good example of that is exactly what I just did with my IRA less than 2 weeks ago.
That was a great one. Tell the audience about that.
Okay, so the deal that I got, there is a gentleman buying a 7-year-old condo, so it doesn't have any deferred maintenance on it, in Sacramento, in a decent area. The last price was $67,000 a year ago, and he's getting to buy it for $60,000, and he needs a loan of $42,000. So he's coming in with $18,000, so it's going to be a 70% loan to value, which is, not super conservative, but I figured, a $42,000 first mortgage on a condo where the rent is almost $1,100 a month doesn't have too much risk associated with it.
Right.
If worse comes to worse and I have to foreclose, then I'll get to foreclose and own this thing for $42,000. And the interest rate that I'm going to get is 8%, which is secured by the real estate.
And what term is that for?
I think it's 3 years.
So for 3 years, you've got an 8%, secured return. Interest-only payments, or
no? Actually, this one is going to be amortized over. I think it's a 30-year amortization, so I'll get a little bit of principal back, and a little more conservative because the loan to value will slowly go down.
Right.
And within 3 years, he'll probably pay us off. And if he doesn't, I can talk to him about extending it at another 8% rate, or I can foreclose. It just gives a lot of options.
And again, this is investment property, not his primary residence.
Correct.
So you're not worried about having to kick a family out of their home if something happens to him financially and no longer can afford to make the monthly payments, which in this case seems pretty unlikely because if you're looking at $400 a month is roughly going to be his loan payment,
yes.
And he's getting rental income of $1,100 a month.
Yeah, and the condo fees are only about $200 a month.
Yeah.
So it's a great. I would have loved to have been him and buy this property for $60,000, but I didn't. That opportunity wasn't given to me. The only opportunity that was given to me was, how would I like to invest $42,000 at 8% interest? And if anything goes wrong, okay, well then I will get down at $42,000.
So the person listening out there is saying, well, why wouldn't that guy go to the bank and get a bank loan to buy that investment condo? And the answer is,
he just didn't quite have enough qualification. In fact, he was making good income at his last job, and he decided to switch jobs to make more income being self-employed at a new type of profession.
So he probably qualified in, maybe let's say 10 years ago when banks were lending to everybody, he would have easily been able to get a bank loan to buy this investment condo. But in today's environment where the banks are, it seems like they're looking for reasons to say no to your application if it's not strictly a home loan purchase for your primary residence.
That's right.
There are some people out there who are probably listening going, well, I can buy investment property through my bank. Well, maybe that's because they've got great income, they got money in the bank, they don't have any glitches, they didn't change jobs. Everything is absolutely perfect because that's really what it's got to be nowadays to get the bank to pay attention to.
Well, here's the funny thing is I've actually talked to financial advisors who said that their clients could not get a loan even though they had $1 million in the bank because they didn't have income per se. They were drawing off of the principal, and maybe they earned, $50,000 a year from that money, but they had literally $1 million in cash, and they couldn't get a loan.
And the reason for that is, and you can thank Frank Dodd for that because among the millions, it seems, of new regulations that have been passed thanks to that huge, pork barrel bill known as Frank Dodd, many of those new regulations affected the lending industry. So they wanted to make sure that the subprime and predatory lending never happened again, right?
Exactly.
And really what the effect of many of these new regulations are to take away consumer choice. And so what happened in this case where you were just talking about a guy having $1 million in the bank and the bank can't make him a bank loan, well, that's because he doesn't have the income, the current income necessary to service that loan. He can't demonstrate that income. So having $1 million in the bank is not demonstrating a current income capacity to make the monthly payments on a loan. And so really what you have to be able to fill in all the squares and all the numbers correctly. It really is, lending for the banks is a numbers game, whereas lending for private lenders, we can use subjective data and decide to make a loan because we can intuitively say, oh yeah, this makes all the sense.
That's right, exactly. And in his case, he decided he didn't want to pay cash.
Yeah.
He wanted his cash available for something else. Okay, we're going to cut to our first commercial break. When we come back, we're going to talk to Mark about more interesting tidbits with regard to these hard money loans, what interest rates could be had, and that sort of thing. And our theme for the trivia is cartoon animals. Okay, here's our first commercial break. Here's our first trivia question. SpongeBob. No, there's no SpongeBob in here. Yeah, Patrick. Okay.
Everything I need to know in life I learned from Patrick.
Yeah. Okay. What kinds of animals were secret and Morocco? Now you have to go back to the 1960s for this one. And what would happen is you'd hear, "Hey, secret, yes, Morocco." That's where the theme comes from. Okay, the first three callers with the correct answer. Now get the kids on the phone because they'll understand this one. Let's see here. Call the first three callers with the correct answer are going to win a free 3-day, 2-night stay at the Lighthouse Resort. Their website is lighthouseforfun.com. Call 888-912-1190. That's 888-912-1190 to answer this question. What kinds of animals, cartoon animals, were secret and Morocco? Hey, secret. Yes, Morocco. 888-912-1190. Make sure to include your name, your email address, and speak slowly and spell out your email for us one letter at a time. And we'll be right back. Okay. Does anyone know the answer to that one?
I don't.
Ooh, got a tough one here. It's not SpongeBob.
That's a tough one.
Not Patrick. And who's the jellyfish guy?
The jellyfish guy.
Squidward.
Squidward, yeah.
I know how to answer that after doing a couple videos of Brian.
You should be doing these. I'll tell you, you're good. I'm sorry, go ahead.
What do you say? We'll do it again.
I hate everyone. Squidward.
You got to do that on the air. But you said you knew.
Brian. I just did one with Brian, Mark and Brian. Brian goes, Joe Montana. Joe Montana.
Yeah, that's what
I hate all of you.
That's good. The thing is, see, your kids are a little old for SpongeBob, but I guess they were young enough.
My 11-year-old still watches it in the morning. It comes on like right at 8 o'clock. We're about to leave. We get about 5 or 10 minutes of SpongeBob in the morning. It's great.
And I had never heard of it until we went over to these friends' house one time. It's kind of cute.
It is. At first you think, oh, this is the dumbest thing ever, but it's totally, it's like most good cartoons. There's so much adult humor that the kids have right over their heads.
Yeah, exactly. That's why I like The Simpsons.
Yeah.
And Family Guy. Family Guy the musical. Yeah.
All right.
Okay. We get back.
Well, we actually never got into what's a deed of trust, and so you just talk a little bit about the investment side. The borrowing side's pretty obvious, but and again we can.
Okay. Welcome back to the Best of Investing. I'm Edward Brown, your host, along with my co-host Mark Hanf of Pacific Private Money. When we cut to the first commercial break, we asked this trivia question. And again, the theme is cartoon animals. What kinds of animals were secret and Morocco, where you would hear, "Hey, secret, yes, Morocco"?
I know I recognize that, but I can't remember.
Okay, but give the audience your Squidward from SpongeBob, because this is a good one.
I hate all of you.
I know you don't hate the audience, but that's okay. Okay, so we're going back to the 60s. Secret squirrel and Morocco mole.
Oh,
do you remember that?
I
okay,
do.
Yeah, see? You have to be older than
Old.
30. Yeah, you have to be old like us to know that. Mark, when we cut to the break, we had said that we were going to tell people what kinds of interest rates and what are deeds of trust. Give me a little more detail.
Well, we started to talk a little bit about how hard money and private money lenders serve two sets of clients. They've got the borrower clients and who need the capital, and then we've got our lender clients, who are private individuals who provide their capital to fund these loans that are just like a bank loan. It's a loan that's made to an individual, but it's secured by real property. There's a recorded deed of trust that's put on the property. So there's a promissory note or a note and a deed of trust. Those are two documents that work in tandem. The note is, how much interest they're going to pay and how many payments and for how long. And the deed of trust is the security instrument that is recorded against the property so that that property cannot be sold or transferred or otherwise encumbered.
Just like when you go buy a house
Right.
and the bank has a loan on your house, you can't just sell the house without paying off
without
the bank.
paying off the loan.
Okay.
So what many people refer to private lending, if you're a lender client, it's often called in the industry trust deed investing. So the term trust deed investing means you're providing the cash for a loan. Now it could be all of the cash for a loan. Let's say it's a $100,000 loan secured by rental property in the Bay Area. You could put up all $100,000, or maybe you put up $25,000, or maybe you put up $50,000. In other words, you could be one of 2 or 3 or 5 people putting money into a loan, or you could fund the whole loan yourself. It's done both ways very commonly, but it's called trust deed investing because your money is secured by a deed of trust. California is what's called a deed of trust state. A deed of trust is a mortgage. It's the same thing. It's that of the 50 states, some states call it mortgage. They call it a mortgage on the property.
But there are certain rules about foreclosure that are a little different.
Yeah. There's actually a difference between a mortgage and a deed of trust, which isn't worth getting into. But in California, when you record a loan against a property, the instrument's called a deed of trust. So trust deed investing is the activity of funding loans secured by deeds of trust through your savings or your IRA accounts. And what's great about trust deed investing is that you can achieve, returns that, comparatively speaking, in today's market are just unbelievable. So
Sure.
whereas you're saving, we all know what the savings rate is. I mean, it's about as close to zero as you can get. And bonds, 4% would be a great bond return.
Well, and you have principal risk where if interest rates go up, usually bond prices go down.
Right.
You have to worry about the company that's backing it. So it's got
Whereas
some risk.
trust deed investing right now, the average trust deed investor is getting anywhere between 8 to 10% on average in a fixed rate. So it depends. When I say 8 to 10 on average, it really depends on what the note rate that the borrower is paying. And the note rate that the borrower is paying could be anywhere from 9 to 11, maybe even 12%. And so usually the investors in those loans get some, maybe 1 or 2 percentage points less than the note rate. But still, if that's between 8 and 10%, that's a fixed rate of return. You usually receive interest-only payments, although sometimes you'll get a little bit of principal back with each payment. And the terms of those loans are usually 1 year, 2 years, maybe 3 years. The vast majority of loans we write today at Pacific Private Money are 12 to 24-month terms. They're not long term.
Well, even if you were to write a loan for 5 years, my guess is the borrower is going to pay you off before then anyway.
That's exactly right.
The reason they went to you was something that happened that they couldn't go to the bank. Like in this example that I have, the gentleman won't be at his regular place of employment for 2 years steady. Then he'll be able to go to the bank and cash me out.
Or someone's doing credit repair, and sometimes that takes 2 years.
Exactly.
And so, and what's really interesting about the different investors that I would consider my regular investors at Pacific, we've probably got, we've got about 300 people who are on our distribution list, meaning that they'll see funding opportunities that they can participate in on a regular basis via email. But of those people, maybe 50 are kind of regular recurring clients. And what's neat about them is everybody has a little bit different appetite. So I've got investors that say, send me only 12-month terms or less. I like the idea of being able to get back into cash, relatively quickly. I don't want to tie my money up for years. I like those 6 to 12-month loans.
Well, here's the other thing is that even if you have 300 people on your list, and let's say the listening audience says, "Oh, well, gosh, I'll never get in." That's not true. That's not true because it's potentially possible that 250 of those people have already committed money within a deed of trust for 2 or 3 or 4 years, they're not ready to invest in another one until that loan comes due.
And I need to have hundreds of people in my distribution list because I'm at any given moment. I don't know how many people are liquid and looking.
Yeah.
So it's we use that term liquid. Who's liquid and looking right now? Who's
Yeah.
liquid meaning they have money in cash, and looking meaning they're ready. Right now, I can invest the several hours it might take to look over the information and make a fast funding decision. Because quite frankly, in our lending market, we're usually doing fairly quick loan applications or fairly quick loan fundings, meaning someone comes to us and say, I've got a short sale I'm going to buy, but it has to close in 10 days. Can you do the loan? And we'll say yes, and then we'll jump on the horn with a number of our investors, start calling around and see who can pull the trigger and make a fast
And the thing
decision.
is, you're not lending in Antarctica or anything, so you
No,
know
just Bay Area.
Yeah, Bay Area. So you know it fairly well. And people who've been listening to the show for a long time, they know we're not an infomercial.
Right.
But I'm sure people listening are going, does this cost anything to get into these loans, or does it cost anything to get on your distribution list? And the answer is no.
No, it isn't.
So if people wanted to at least just be on the list to get information in case a deed of trust comes up, to just look at it, not be committed to anything, but just kind of listen to what you have to say, what would they do?
Well, you would want to go to our website, which is, we have actually two websites. We've got websites for our investor clients and websites for a website for our borrower clients. So if you're interested in learning more about trust deed investing and how to earn 8% to 10% return on your money safely and securely, meaning it's secured by a recorded deed of trust, there's title, lender's title insurance, there's hazard insurance in your name, so there's all the same safety features that a bank would have. So go to our investor website, and that is Pacific Private Investments, plural.com. That's Pacific Private Investments, plural.com, where you can call us at 415-883-2150. That's 415-883-2150. We'd be happy to shoot you out some information by mail. But what I was going to go on and say, I talked about some of the guys that love 12-month loans. I've got appetites from investors that like 24-month loans. Some people like 36-month loans. Generally speaking, on the super short-term loans, you can get a slightly higher than average return. Maybe you'll get 10 or even 11% on a short-term loan, whereas if you are looking to maybe put your money to work for 2 to 3 years, generally speaking, we're offering slightly better interest rates to the borrowers. In that situation, you have your money working for you longer, and so maybe you're going to get closer to 8% on a longer term. So
and then some of your clients are, I only want to be in San Francisco, or
Right.
I don't want to be in San Francisco.
Exactly, or they'll lend all over the Bay Area, or don't send me anything in Sacramento, or I love Sacramento, so it's or Central Valley. There's a lot of
or
funding
certain
opportunities.
LTV.
Exactly.
Yeah, so it's all over the map. So again, for those listeners, you can also go to bestofinvesting.com website.
Yeah.
You'll see Mark on that. You can click on him. And we're going to cut to our second commercial break. Again, the theme is cartoon animals. But before we do, we have a special trivia contest where the winner is going to receive an overnight stay at the beautiful Fairmont
Nice.
the Fairmont Sonoma Mission Inn. And for over 85 years, the Fairmont Sonoma Mission Inn and Spa has catered to discriminating travelers and has given prestige to the Sonoma Valley. Known for casually elegant accommodations, sensational cuisine, healing thermal mineral waters, luxurious spa treatments, and world-class golf, the inn will soon unveil 30 newly renovated signature mission suites, along with a new premier winemaker suite, aptly titled the Jack London. From the moment guests arrive, they will find themselves immersed in the grace befitting one of Northern California's finest resorts. Building on the inn's historic legacy inspired the design plan, the new suites will respect the inn's mission-style architecture, successfully capturing the essence and beauty of the wine country. Check out www.fairmont.com/Sonoma. It's one of Mark's favorite places.
Oh yeah.
Okay, and here's the question. Almost 70% of these are owned by women. What is it? And here are the rules. No previous winners of any of the trivia contests by Best of Investing. You need to email edward@bestofinvesting.com by midnight tonight, and the winner will be randomly chosen from amongst the correct answers we received and announced next week. Now, again, the theme for the Lighthouse Trivia contest right now is cartoon animals.
Mm-hmm.
And here's the second trivia question. In this cartoon, you might hear the bad guy say, "Let's get Moose and Squirrel." And the main character say, "Come on, Rocky." Name this cartoon. The first 3 callers with the correct answer win a free 3-day, 2-night stay at the Lighthouse Resort. Their website is lighthouse4fun.com. Call 888-912-1190. That's 888-912-1190 to answer this question. In this cartoon, you might hear the bad guy say, "Let's get Moose and Squirrel." And the main character say, "Come on, Rocky." Name that cartoon. Call 888-912-1190. Make sure to include your name, your email address, and remember to speak slowly and spell out your information for us one letter at a time. And we'll be right back.
That one I know.
That one you know. Boris and Natasha.
Yes, Boris and Natasha. Back in the Cold War era.
Yeah, that's right.
Might be politically incorrect today. Would it be that?
Probably.
The
And you know
Russian
what's funny?
spies.
I never liked that cartoon. I loved cartoons, but I didn't like that.
Yeah, that was never one of my favorites either. How funny
Yeah.
you should say that. Rocky and Bull.
It's like I was a Lost in Space person rather than a Star Trek, and I was a Munsters person instead of an Addams Family.
Yeah, I would say that that's true too.
So yeah, it's sort of like this kind of a running theme.
Watch the Time Machine. That was always the good one.
That I'm trying to remember that one. Remember, it's about time, it's about space. That was an old cartoon where they go back
It's
to
about time,
caveman
it's about
days.
space. Yeah, the caveman one. I forget what that one's called. I remember that one. But the Time Machine was the other one. That was when they would always go into the Time Machine and they was
Oh yeah.
as kids you'd go
Yeah.
time. Going into the next falling into the next era.
Okay.
What do you have on your shorts?
Oh,
Oh, what do we say today?
what are we saying today?
Oh, let's see. Winter's coming up, huh? Summer. And sad this may be the last week I can wear these shorts. It's cold out there.
It
It
is.
is. Okay, we'll film your legs
So,
next week.
So I can get this off. Okay. So ready? Get this on film so we can take this off. It
Okay.
itches a little bit.
Go for it.
Ready?
Ready.
You get it?
Get it.
Hey, it came off in one piece. It came off about
Without
25
your
hairs too.
Yeah. Of course.
Isn't that what waxing is?
Absolutely.
Wax on, wax off?
Yeah.
Okay, what do we want to cover?
Talk a little about savings and let's see, are banks grow fat on lean
Oh, yeah,
interest
yeah, yeah.
rates? Talk about that a little bit.
All right. Are we ready?
We are.
Oh. Shift this camera.
What are you doing?
Oh, I always move this camera around a little bit.
Oh.
Just to give it another.
I could go
Gorgeous
this way,
look.
or I could go this way.
Yeah. But you're gonna go.
Or I could just stay like this.
Well, yeah.
You know, back in the old days, you had to sit still for 8 hours to get your picture taken. No wonder nobody was smiling.
8 hours. Wait, 8 hours.
It's true. Otherwise, you have to be like this the whole time.
You mean the 1800s?
Yeah, that's right. Yeah.
8 hours. I like it.
Like that?
Yeah.
How do you like me now?
Yeah. You like me now. I can see you now.
What is that music that you put in the first part of one of the shows?
I don't know.
It's just like lullaby type stuff. No, we gotta have that.
Want to change it?
Well, I like the.
Oh, when you talk, you mean?
Yeah,
Oh, we can change it.
I like the. You know.
You want the regular,
Yeah.
the whole regular music?
Yeah, sure.
Oh yeah. Okay. Just tell me.
Okay. All right, boss.
We'll call it the new Edward Brown Show. Sorry.
Welcome back to the Best of Investing. I'm Edward Brown, your host, along with my famous co-host and handsome one, of course. No, don't laugh. You're handsome. Your wife told me so. Mark Hunt of Pacific Private Money. When we cut to the second commercial break, we asked this trivia question, and again, the theme is cartoon animals. In this cartoon, you might hear the bad guy say, "Let's get Moose and Squirrel." and the main characters say, "Come on, Rocky." Now, we all know with Boris and Natasha, what was the name of the cartoon?
Rocky and Bullwinkle.
Bullwinkle. That is correct.
Was it Rocky and Bullwinkle, or just Bullwinkle?
I think we just call. That's a good question. I think we'd accept either answer, but I think we just Bullwinkle is how we used to call it. Mark, you were looking in the paper, or you had an article on banks.
Yeah, I brought an article in that pulled off the blogs. I was doing my radio show prep and looking for the latest real estate blogs, etc. I came across this one I thought was kind of interesting. The headline: Banks grow fat on lean interest rates. And basically the net of this is notwithstanding the fact that we as consumers are generally enjoying fabulous mortgage rates for those of us who can buy a home right now or refinance our loans. I mean, you're talking rates in the high threes, right? 3.75.
Possibly even lower if you do like
possibly even lower. I mean, it's changing week by week, and
Sure.
Things happen and it goes up and down a little bit. But the bottom line is that it says here that mortgage lenders are profiting greatly from the low interest rates, and in fact, they're making a bigger spread today than they were in the heyday of lending, say in 2004, 5, and 6.
It's because with the difference in the Fed funds rate and what they could lend out at.
Well, apparently what's happening is that even at 3 3/4, the cost of funds to a bank is so incredibly low that the yield spread that they enjoy when they originate a loan and as they service that loan is actually is higher today than it was historically.
Okay, so not only is the bank getting a higher interest rate spread, basically, but it also is more conservative because not too many people comparatively are going to default on a 3 3/4% interest rate loan as compared to when interest rates were 8 and 9%.
Right. So the banks aren't having any trouble selling these new loans on the secondary market because the quality of the loans that they're underwriting today is really high. First of all, they're underwriting the borrowers like crazy. You have to have real income and real money, and no more
no more monopoly money.
Yeah, no more monopoly money, or if you can fog a mirror money, you can get a loan. So essentially, what this article is saying that lenders and Wall Street bankers are profiting to the tune of roughly 5% of the loan amount on every loan they do. So they're getting about 500 basis points or 5%
Okay,
roughly.
How does that work if they're only charging 3 3/4 because points are charging?
Well, because they're first off, there's the origination fee, which on average is 1%.
1%. Okay.
And then you've got the yield spread premium, the YSP that they get, the margin between the note rate paid by the homeowner and what Fannie and Freddie earn. So that's 0.25%. And then but most of the profit is made on the money when they bundle it into mortgage-backed bonds and sell off to pools of investors. It says here that they can add additionally anywhere from 2 to 3% of the amount of the loan in what they call instant profit. So it goes on to say that historically, banks were generally making a 3% spread
at the most.
Yeah.
Yeah. No,
So-
if they could make 3%, they were very happy.
So so here's another possible reason why the banks really aren't bothering with some of these other types of loans. I mean, they're doing so well in the consumer home loan market right now, and quite frankly, thanks again to Frank and Dodd. They have a monopoly. The banks have a monopoly on home loan origination because any of you out there who know anyone who used to be an independent mortgage broker probably know that they are very likely no longer an independent mortgage broker. They're either out of the business, or they're working for a bank, or they're working for some very large mortgage brokerage. And so there's been tremendous consolidation in the industry. And so right now, the banks, which was not true 10 years ago, but today, Wells City, B of A, Chase, they're originating the preponderance of loans, and and there's a lot of fees and spreads that you don't know as a borrower that they're actually earning. It's not disclosed the same way.
I was just thinking that we were just talking about how their spread's about 3%.
Yeah.
And your hard money loans that you do, the spread's like 8% or close to it, right? Because someone's earning only 0.25% in the bank, and they can earn 8.25% with you, let's say. It's like, why don't the banks get in the hard money loan business?
Well, so the banks are not hurting in this environment, so they're doing very, very well for themselves. Thank you very much. And it's interesting that you say you mentioned that the spread that a trust deed investor, as we were talking about in the last segment, a trust deed investor is someone, private individual, who takes a portion of their savings and invests it in a note secured by a deed of trust.
Yeah.
Basically becomes the bank, becomes the lender to a real estate investor looking to borrow money so they can invest in real estate. There was another article I picked up. I think it was in the Chronicle. It was probably this was a Chronicle columnist who was talking about Fidelity's rule of thumb on retirement savings, and this is related to there's tangentially related to what we're just talking about, and that is, it talked about how much of your annual income you should have saved up, the equivalent of your annual income
Still 3 to
as
6
you
months?
get older. Well, it talked about, she was saying, in this article, let's say you make $100,000 a year, and as you're working your way up toward retirement age, what multiple of that $100,000 should you minimally have saved up? And interestingly enough, it talks about how at age 35 you should have 1 year's salary saved up, and by 40,
Wow.
2 years' salary saved
Oh,
up.
saved, not talking about liquid cash.
No, saved, or in
Just
your
in your
savings,
okay,
in your retirement
okay.
plan. At 45, that would be 3 years, and at 50, where you and I are
Pushing.
right
No,
around-
I'm over.
it's 4, and then it goes up to 5 at 55. So every 5 years, you should have another year's savings tied up and or set aside.
Well, that makes sense, because if you think about it, I mean, if you retired at age 50, you couldn't, because you'd only have $400,000, and the interest rate that you earn on the $400,000, in theory, is unless you're going to get 25% a year on your money, you're not going to replace the income that you lost.
Well, that's exactly it. And here's where I'm going with this. So let's just say at 60, you do have 6 years of your earnings saved up, and let's just say your average earnings were $100,000, and now you've got a little nest egg of $600,000 from which to earn from. Here's the rub. Well, it's a couple of things. Number one, many of us may have been on track in our retirement plan until 2008 hit, right? So a lot of us have experienced a little bit of a reboot, if you want to use tech terms in our savings. So not only so there's 2 things that are happening for those of us boomers who are looking ahead to retirement. One is the principal has taken a hit, and then number 2, interest rates.
So
I mean,
how do you catch up?
How do you catch up? Right, and that's why I'm so bullish on trust deed investing, and that's why I have more and more new clients coming to me saying, please tell me more about how I can invest my funds into trust deed secured notes, because most boomers, I would bet right now, are not on track to retire successfully.
For sure. And the thing is, when you talk to people, you're not their financial advisor. You're not telling them to put everything into deeds of trust. It's just one portion of the segment of their retirement.
It's for people looking
savings.
if you're looking to boost the overall average yield you earn on an annual basis on your retirement savings, trust deed investments, in my opinion, is something you shouldn't overlook. You should at least take a look at it and do your due diligence. It's a great way to boost the average annual yield on your savings.
Well, here's the thing. I'm sorry. Here's the thing that I've always loved about it is it's not rocket science. It's really not that complicated. I mean, people understand buying an investment piece of property for rental income. Well, how much more safe is it to be the bank, and have that extra security in there? You're talking about just investing in a piece of real estate as a mortgage on there. You're not talking about having to understand the technicalities of how a computer works, for investing in XYZ company or ABC company. You know what I mean? You can actually go and look at the piece of property.
And that's what many of my investors do. So I'll call them up and say, hey, I got this loan application from a guy who's going to buy this property in Hayward, and he's going to remodel it, flip it, and he's He's looking for a 1-year loan, and he'll guarantee at least 6 months interest to you, meaning that if he pays off the loan before 6 months, he's going to pay you the difference. So you're going to get at least 6 months interest on a 12-month loan at 10%. And it's in Hayward. Here's the address. And so these guys will jump in the car. They'll go drive it. They'll look at the neighborhood and go, not bad. I wouldn't mind owning this property if it's worse. And that's really the way a lot of guys who invest in trust deeds look at it. They go, I will make a loan. I will.
I'd love to own it for that.
Right. They'll make a decision to invest in a loan based on the answer to the question, would I mind owning that property? Because that's really the downside. What's the risk if you invest? What are the risks? And let's talk about those if you invest in, if you participate in trust deed investing, as it's called. Well, the risks are the borrower stops making the loan payments. So if you were relying on that monthly interest to live, that would be a problem.
But that's right. Well, here's the other thing is that when you have an individual borrow the money from you, they are personally liable, aren't they?
Oh, yeah.
So if for some reason that piece of property didn't look so good, you could still go after them instead of going for that piece of property. You can go after all their assets.
Well, you can. That's exactly right. So you've got a couple of forms of you've got security by the person who's borrowing the money, the guarantee that's implied in the loan. Then you've got the collateral that you can foreclose upon. So let's just say they do stop making their loan payments, and then 60 days go by, and that's usually when we would file a notice of default and go through the foreclosure process, which most people are familiar with because foreclosures have been in the news for the last several years now. So 90 to 120 days later, you would potentially own that property, and then and we in that situation, which happens, let me just tell you, very, very rarely. Out of 400 loans that we've originated in the last 4 years, only 5 have gone to foreclosure, and each time the lender made out better.
Oh yeah, and if they pay the default interest and late fees, I mean, they can really make out like bandits. We're going to continue on with that when we come back from break. We're going to cut to our third and final trivia question commercial break. Again, the theme is cartoon animals. Which cartoon character would often say, "Come on, boo-boo, let's go see Mr. Ranger"? The first 3 callers with the correct answer. You don't have to write this down. You know that one. The first 3 callers with the correct answer win a free 3-day, 2-night stay at the Lighthouse Resort. Their website is lighthouseforfun.com. Call 888-912-1190. That's 888-912-1190 to answer this question. Which cartoon character would often say, "Come on, boo-boo, let's go see Mr. Ranger"? First, make sure to include your name, your email address, and remember to speak slowly and spell out your email 1 letter at a time. And we'll be right back.
I was actually writing down another idea to remember.
Oh,
because
I know.
one of the things I haven't mentioned recently is that I do have some investors that like investing in notes, and rather than buy real estate, and over time they just assume that if they make enough loans, they're going to back into real estate ownership by foreclosing.
Oh, that's good. I like that.
And so I know two of my clients own a pretty decent portfolio. Well, actually, you had said to me that your portfolio is based on well, for better or worse.
Yeah.
I won't say that, but
no, but it's true though. I mean, it's.
There was another guy that called me the other day, and he owns a bunch of real estate that he foreclosed on, and it's been good for him. And so that's he doesn't mind foreclosing. So some people don't. So really, again, it kind of goes back to the question that of my many clients, everybody has different appetites, and some people absolutely want to make sure that borrower is going to pay month after month because they want that income. And others say,
so much.
Hey, I'm secured. I don't care. Hey, if they don't pay,
Exactly.
I'm just going to foreclose, and that'll be my profit. And they're not reliant on that income. It's just another investment they're making, and they don't mind having to, the management or the attention that they have to give it if it goes into default.
Exactly. It's going to be a short segment here.
Okay.
Yeah, I think that's a good way to end it. You can, I don't know, you can download some of this stuff on your website, and this would be a good one.
Oh, This show?
Yeah.
Oh yeah, this one I was already thinking about that. I'll probably make this the one of the videos.
I was going to say, because we'll get it on, I mean, it'll be this YouTube, but then as soon as he does that one. Okay, ready?
Yep.
I guess he's ready. He hasn't done anything. Welcome back to the Best of Investing. I'm Edward Brown, your host, along with my co-host Mark Hanf of Pacific Private Money. When we get to the third and final commercial break, we ask this trivia question. Which cartoon character would often say, "Come on, boo-boo, let's go see Mr. Ranger"? Mark, you know the answer.
That's easy. It's Yogi Berra.
Yogi Berra, that is correct.
Yogi
He
Berra.
played Yogi Berra. He played
Yogi
for
Berra.
the Yankees. That is correct. Okay, Mark. When we during the break, you were telling me some pretty exciting stuff about some of your clients who actually love to actually do the foreclosures.
Well, we've been talking this show primarily about trust deed investing. So if you've just tuning in late and you want to hear more about the show, the podcast will be available to download off our website. That's thebestofinvesting.com, so you can go back and listen. But so what's interesting about the term trust deed investing as referring to people who invest their money in loans secured by deeds of trust is that technically it's not even really investing; it's financing, and which is interesting because the deed of trust is a financial instrument. So when you're loaning somebody money secured by real estate, it's secured by a financial instrument, and the hallmark of financing is security and insurability. So there's insurance, there's title insurance, there's hazard insurance. You've got a recorded first position lien. So so it's really not in the same realm as investing, where you're investing in stocks or other traditional assets. So just wanted to make that little distinction there because I think it's important. But what's also interesting is that I have a bunch of clients that one of the reasons they love to fund loans is, first of all, there's no tenants and toilets, as they call it. Some people do tire of owning real estate over time,
Sure.
so they invest in notes.
Thing.
Right, exactly. Yeah. And then there's others who like investing in trust deed secured notes because they figure over time they'll end up owning some of that real estate, and for them that's a good thing.
That's actually happened to me personally.
Yeah, so I do have several clients who have a nice real estate portfolio based on properties they made loans on, and they ended up foreclosing. And again, if it's done correctly, you will almost always come out ahead if you end up foreclosing on a property that you made a loan on. Now, of course, if you agree to fund a loan at 100% loan to value, that's probably not going to turn out too well. But we of course don't ever do anything like that. We're generally doing 65 or 70% of the market.
First deed of trust.
First deed of trust, first position.
Income producing type assets.
Income producing property. Yeah. Now, certain things could potentially happen. The property might get trashed and go down in value a little bit, but that's why you loan 70 versus 80 or 90, because you want that that cushion of protective equity,
Sure.
that 30%, 30 to 35% that we solve.
Yeah,
for.
I mean, nobody's saying these things are risk-free, but at least one can make an intelligent, informed decision, and the interest rate is high enough to warrant that. I mean, they're obviously, we're not talking about FDIC insured T bills, but those interest rates are 1% or 2%. Here you're talking about 8%.
I have clients that invest most of their savings in trust deeds. They consider it the best kept secret in investing.
It's not a secret anymore. We're just announcing it on the radio.
Is that you can get 8 to 10% on your money. Really? I mean, for many people, I know myself personally, I have a bias against stocks. I think it's just an absolute roulette system to invest in
legalized
stocks.
gambling, as they say.
Yeah, I mean, there really is no guarantee of anything that's going to happen. I mean, unless you were smart enough to buy Apple.
Yeah, but the stock market's not manipulated. Come on.
So so to be able to really control, what you loan your money on, what property you loan it on, what the interest rate's coming to you, and whether or not you feel comfortable if you had to foreclose on the property, owning that property. I mean, I think that as you learn, the kind of the ins and outs of trust deed investing, you can get so good at this that you might find, as many of my investors do, they don't want to own stock, they don't want to own bonds, they just want to earn high interest and high returns on these yields.
Okay, one more time, give out your information for people who want to invest and get 8 to 10%.
Our website is pacificprivateinvestments.com or call us at 415-883-2150.
Or check us out on
Thebestinvesting.com.
Okay, we're going to have to end here, so here are our thoughts for the day. If you get cheated by the Better Business Bureau, who do you complain to? That's a tough one. And if the Flintstones, since we were talking about cartoons, if the Flintstones were BC and before America, why did they have a Flintstones Thanksgiving and a Flintstones Christmas, huh? Answer me that one, Mark. They just don't know. Okay, maybe he'll know the answer next week. Okay, tune in next week to The Best of Investing. We're going to be giving away 9 more free vacations for answering trivia questions. Thanks for listening. Tell your friends, and on behalf of our team, I'm Edward Brown, wishing you the best of investing. So long.
It was a fast hour.
It was.